The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just checking out where everything's at right now and what we can do to maybe take advantage of it. We got the S&P. It is up there. So 17.75 points. Hit right at that 1,700 level. It has been trying so hard to break it. And it was able, I guess you could say, to break it. It got right up there to 1,700.75. Pulled back down, trying to push back up, just oscillating a little bit right there. We got the Russell up 13 points. We have the NASDAQ up 26, and the Dow's up 119. So that wraps up our indices there. Over on oil, it's up $2.68. That is a massive move on oil. We'll take a look at the deviation levels here in just a moment. We got natural gas currently down over 1.5%. We got corn is down nearly 3% on the day. Soybeans down over 1% on the day. Euro dollar currently down 96 pips. Aussie dollar down 56. Pound dollar down at 92. Dollar CAD up 68. And dollar franc up 103 pips on the day. Euro yen currently up $1.03. Pound yen up $1.29. And US yen up $1.47. So some nice big movements today. We got gold is down a whole $1.30 from settlement right now. And we got silver is flat on the day. Copper, though, decided to stand on out. It's up 1.5% on the day. And so that wraps up where the market is. What news did we have this morning? And so what we can see on that, the news this morning came out. And, some good things that we can take advantage of. And so to look at a few of those things, I'll pull them up for you. We'll sort of talk and walk on through them. We had the manufacturing PMI, asset purchase facility, and official bank rate come out of Britain this morning, and with some pretty wild volatility on that. So let me pull a chart up, and we'll just walk on through it right there, step by step, and see how it played out on the news this morning. Right over here, we can go in. And the news came out at 7 a.m. Okay, that was the asset purchase and official bank rate. The PMI, really not something to focus on, especially with having the interest rate announcement come out. It just wasn't worth the time. You expected flat. And again, this is something to sort of bring up. I think it's a good thing. Here, let me go in. We'll pull up pound. Dollar yen did the same thing there. We'll go into the pound. One of the things I've done a lot of focusing on, and the thing is you got to find a binary that'll line up. That's the hard part. But soon, so hopefully here in the next 60 to 90 days, Nadex is going to have at nighttime at 2-hour binaries, and which will allow for even more trading opportunities, because I'd be loving to go in and take advantage of some of these. But they do have 7 a.m. binaries. Okay? So they do have 7 a.m. expiration binaries. So that's something we'll have to add to the playbook, right, on these interest rate days, because we know just like the FOMC for the United States, where it gets flat before it, same thing can happen on most of the currencies before, like, they launch their, interest rate. So like the pound dollar. And you can see, we had a little bit of a range, but not just a massive range on it. And again, they got the asset purchase. Let's see, what is it? The PMI came out, it popped up a little bit, came on back down, and we got a good move. So it was a solid move, but it basically gave it all back up while it was waiting on the announcement to come out. So our net result really wasn't that big, but it did fly. Let's see, from 64. I guess you get a little more credit than that, right? Got about 50 pips out of it or so, and it came in better than expected. So the pound ran up, pulled on back down, and Britain left this interest rate the same. And then of course you got to go in and look at all the fun details. What came out in the news, what was the statement, what all, how did that impact it, and just on down the list. And overall, it gave an immediate pump on up to, the pound. You can see right here, we had a move. Let's go ahead and check that move out right there. We're going to move up, basically back up to settlement, but just to look at it right here. First, we had to move down, okay, 34 pips, and then we had to move up to a high of 85 pips from high to low, and then from open there, we had to move up about 51 pips. And so I go in and I look at, the new stats I have that I put together on that, and for the trading plan, for, news trading. And, our high to low on this report, let me pull that back up. I had it up this morning. Pull it back up again. And our high to low on the pound was an average, okay, of 60 pips. Well, we got a move up of about 50. But we got a total range of 60 pips. So we got, we definitely hit that range of 84 pips. And you do got to measure that high to the low when you're looking at those ranges. So if you were able to pull off a straddle on that trade, then you could have got out at about, a little better than break even. Because you really weren't getting the move. The time went by. And so, as that's going on by, you probably would have had it expire on you anyway, depending upon what expiration you chose when doing that trade. So just looking at, some of the different things there. You have the 5 a.m., the 6 a.m., the 7 a.m.s. So it just depends upon, again, what trade. So the PMI report, let's see here. We'll look at that one, too. We'll put all the pieces together. So we got this one. Let's look at PMI. And right here, PMI, if we got that average move. Again, the average move on PMI, sorry, but that was 60 pips. And we got a move of 57. And from high to low, I think we hit it pretty much on the dot there, 64. So, yeah, pretty much nailed that. We did get the 60-pip move. So as long as you could get in the risk-reward, then that trade, the PMI trade, actually made money. That's pretty cool. So that one worked out well. And, sorry, there's so many trades I've been looking at today. I've just got them cross-wired there. And then on the pound interest rate, let me pull back to that one. Okay, that one we expect a average range of 70 pips from high to low. We got a move of 85 pips from high to low, so we definitely hit our range. 90% of the time it surpasses 50 pips from high to low. Obviously, we hit that as well. But that just with the chop on that and the move up and the move back down, let's see, you would have been looking at expirations of pretty much either 8, 9, or 11. So if you got 8, you would have been out at a break even. 9, you would have been out probably a break even if you would have got out of the trade. If you just hung in there, I don't really like to hang on. Either I get my move pretty quick or not, because on interest rate, it can just go nuts. If you chose 11, then you actually could have been pretty profitable in the trade as well because it moved down pretty far. Let's see, I'll show that one to you. Just pulling the range over here, right there. So you got, 60 pips on that one. And so if you're putting in a risk of, approximately, $47, you would have made a little bit of money on that trade. Nothing major. You would have walked away a rich man, but it could have worked. Or woman. And so that's our pound interest rate analysis. We also have the pound yen. And we can look at the pound yen over here. So right there we got pound yen. Pound yen, a lot smoother chart. Didn't really see it, but the pound yen also, the chart looks small and often is much larger than it appears. So if we look at the low to the high on the pound right here, low to high of 11, we would have got 90 pips, okay? Low to high, the 8 or 9 o'clock expiration, we got 76 pips. We averaged 70 pips on that. So, we're right. Basically, that's right what we expect. And the important thing, I got to just reiterate this, is you need to measure that high to low because that is really what we're shooting for. So if it pops down 30 and then up 70, you need to be looking to get out at break even on those trades. Okay? If you get that one direction, that's what you're really shooting for. Then you can have a nice profitable trade on that. And so that was our pound one. Then we had, the ECB interest rate come out. So we'll pull that up. Usually don't expect a massive move off of it, but I'll pull it up for you. And then the big move we expect more is off the press conference, not the rate announcement. Okay? So, but, Draghi has actually surprised us a few times on this one. So we could have, you could have a big move. You just don't expect it. and you look over here, it's almost like it didn't even come out. Okay, 7:45, and like sort of nothing happens. Yeah, that's what we expected. And again, notice this flat volatility right here. So very flat volatility. I can't wait till they get 2-hour binaries going constantly on FX, because you can go in and you can actually start trading that and taking advantage of that flat volatility. You could do, like, say, I guess 7 o'clock and have some there. You don't have, like, there's only about a 20 pip range up and down. So you could have taken advantage of some of that volatility. Now, looking over here and going, okay, well, finally the press conference came out. It comes out in 2 different parts, okay? And so the first part is like the read statement, it's a prepared statement. They read it out, he reads it out loud. And then the second part is the open Q&A, okay? So we look over here at the open Q&A, and we go, okay, what happened? So he starts talking, and I'll pull up the stats on that one as well, so we are ready and can sort of, see how that played out. On average, it moves pound dollar or euro dollar moves 60 pips, pound dollar moves 70 pips on this announcement. Oh, that's the US ISM. Wait a minute, one more. There we go. Okay, ECB press conference. Okay, so on average, the euro dollar moves 78 pips. So let's see, did we get a high to low of 78? We go down here. Within 2 hours, we go up here. The high. We got 75 pips. So we did get our high to low move. Okay? Now, as far as our announcement out of the gate, got to move down to here, 42 pips. So this is sort of a very similar scenario. When you get that crazy, down, up movement, then, if it pulls down like this and then it shoots up, you're sort of going to be looking to bail on that trade as quickly as you can, because that's just, that's how FOMC interest rates go. They're really nuts on their up and down movements versus just being one direction or the other, unless they change the interest rate. And then it'll just shoot like super fast in one direction. Like if they would have lowered the interest rate, you would have saw the euro just drop like a rock. They would have raised it, it'd rise up really fast. And you just buy whatever you get your hands on. If it drops, you can sell whatever you get your hands on. But you go in here, and just, he said this, they didn't like that. He said this, they didn't like that. He said this, they didn't like that. And then you just get this choppiness based on it. And it can be tougher to trade. So the FOMC, any of the interest rate announcements are, a little rougher than some of the other trades. But they do offer some high premium collection opportunities. So one thing that I'm exploring more and more as I'm watching these FOMCs is more often than not, there's so much volatility built in, but usually they just come back together. And so I'm looking more and more at actually doing, as crazy as it sounds, doing binary butterflies into the news on interest rate announcements versus trying to straddle or strangle them because the premium's too high. If you can't do the premium, you might as well do the opposite and collect it. All right, there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, welcome back here to the Diagnostic Trading Hour. So it looks like we got gold doing a little run on up right now. Got 1311 binary. Looks like it might work out pretty well. Got about 6 minutes left till expiration. So checking that one out, the 1311 buy. Got to keep an eye on it. It is 7 ticks away, but we only have 6 minutes. We got at least our 5-tick minimum. And like I said, we do have a current uptrend in gold. So as long as gold just continues that uptrend, then we ought to be just fine. If not, then we will not hesitate. We will exit out of that trade instantly. If it comes back down and hits our strike of 1311. Okay? So, and to find the trade, it's pretty easy. Just hop over here, hop in the binary scanner. You can choose live or demo. So you can do this either way. I highly suggest you demo trade these until you get it down. And this will, you got to log into your Nadex platform. And then I go in and you can, there's a lot of different ways to do it. You can set like 65 to 95 right here, 0 to 30 minutes, choose whatever market it is that you want to trade, such as, say gold. And then go down, find the one that lines up. There's a 1311. I got in for 75 on that one. And you just click on the ticket. It pops up and opens up. And then you can place the order right there. So pretty simple, pretty easy to do the trade. And like I said, in that 75.50. And we just added in a feature right now where you can actually see your orders, open and working orders, right there in the market. And I can even go in and click this button right here. And if I want to maybe get out of the trade early in case it keeps moving on up, I could say maybe set a take profit for 95 or whatever. Okay, so I could go in here and say, you know what, I want to get out of this trade at 95 and hit a place order right there. And then if it goes on up, it'll get me out. I got that working, and so now it's doing its job for me on the trade. So we're working out. This is in beta. We're working out the different pieces on it to get it working the way that we need it to. But it's pretty sweet. So I'm pretty excited about it. And, once we got that going, then we'll be all set. But anyways, keep an eye on it. And, again, make sure, if it goes back down to 13.11, you got a bell, okay? So don't hesitate on these trades. Just, watch them, and because they'll eat you alive if you don't get out of them when they go down. And more often than not, they seem to work out pretty well. But the biggest mistake you can make is not exiting when it hits it. So, anyways, check that out. And again, remember, if you are using the scanner right now, this is in beta. So if you notice anything, let us know. We've noticed a couple small things already. We're working on fixing those. But I'm excited because the idea here is to be able to add in some, features like stops and OCOs and contingent orders and things like that that we can take advantage of, make it a little easier. The whole goal of the scanner is to make it easier to trade on Nadex. And looks like so far it's done pretty well. So we'll just keep adding in pieces and different things. And this is sort of my toy, like playing with it and having fun with it and making it work, in the best way possible to help me and other traders out. All right, so we got that one up. Like I said, make sure to keep an eye on that. It's only got about a 5-tick leeway. So if you have to bell, just hop on out, okay? Because sometimes it'll happen during breaks or, what else, and I don't want you to be stuck cold in the bag. All right, so let's go over here. We'll look at this one, check out where it's at. And, all right, so that's gold. Gold, let's look at what it did last night. Moved on up to 1 deviation. Okay, so we got to move up to 1 deviation right there. It's exactly what we expect because that's what the market says that it expects. And that's based on a deviation from the previous day's settlement price. And it's basically how far the market said the market is going to move. And what do I mean by that? We take the implied volatility out of the underlying market's options, and we actually extract that number and use it to help us calculate the implied volatility. And that implied volatility then allows us to go in and go, okay, well, what does that implied volatility number mean as far as how far the market's going to move? And with that, we're able to go in and basically give you that number. So we do all the hard math for you, and then we're done. So, I mean, that's pretty much all there is to it. And let's see here, but it's insanely accurate how it literally just goes right to the strike. And then it'll turn right back around and hit it, or right to the not the strike, but the deviation level, and turn back around on it right there. So this one got really close right in that last 2 minutes, and but it looks like we're going to be okay on it, but it is very, very close. We'll see how it ends up. All right, y'all stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Now, that was close. Okay, a little too close for comfort. It expired at 1311.08. So, thank God for settlement, right? So on settlement, what they do is they take the last 25 trades and right up to 1:30 p.m. They get rid of the top 5 and the bottom 5 and the average the middle 15, and they round it out, basically 2 additional decimal places. And if it expires above the strike, you're profitable. If it expires below it, you're not. And it came right down there and just started trading like right at it. And but it expired above it, so profitable trade. And usually they don't come that close, but when they do, they let you know you're alive, to say the least, because your heart starts. Anyway, so there's another nice live trade for you on TFNN. All right, let's go check it out and see what else we got. There's nothing like doing that on the radio. Okay, we're going over here to euro dollar. And we got your dollar dime, we got gold dollar. Okay, let's check out the ISM. Let's look at that report, because I know that came out well. I got some reports from multiple traders that they also were able to be profitable on that trade. So it came out at 10 a.m. We were looking at pound dollar and euro dollar. Pound had a little more movement on average, so this is an interesting stat. Okay, the pound dollar moves 63% of the time. It moves greater than 50 pips. Its average range is 70. Okay, so on average, it moves more, but less often does it break 50. The euro dollar, vice versa there, actually moves 71% of the time. It breaks 50 pips, but the average move is lower. It's only 60. So it actually has a lower move, but more often it makes at least that 50 pip move from high to low. And ISM is usually a little bit more trend friendly. It's not like the FOMC stuff that can be a little crazy, volatile. Okay? So let's go over here. Let's check out euro dollar and pound dollar for the ISM report. And we can see right here, okay, report comes out, drops on down, got 49 pips. So, perfect. So right there, right down to 49 pips. And, it took its time. Your first initial spike was pretty sweet. So right there, you still got a good distance. 42 pips on that one. Okay? And so if you were doing, as long as you're doing spreads, you should have been just fine on the trade. Even binaries probably would have worked out for you, but they would have been closer. So, but the spreads worked out a lot better, and now some of this volatility is being, sucked out of the market a little bit. That helps. Now we'll get it back. We're going to get it back tomorrow. We're going to have the NFP. So that'll be a fun, interesting trade. On that one, we'll be looking that one up and giving you all the details, going to do the market cap replay for you on there. But so right there, 42 pips, 49 pips on the way down. And let's see, let's check out the pound dollar. Okay, so the pound dollar usually moves more. Okay, but at least we stayed within pretty much our average. 71% basically hits 50 pips. Okay, let's go over here to the pound dollar. And pound dollar was pretty interesting. I was watching this one with some other traders this morning. We were looking at just the movement on it as it was going. I'll get rid of some of the ones from the interest rates and stuff from last night. We'll get rid of all that. And we'll go over here. We'll check this out. Okay, so we got right there, and then our low right here was 69 pips. 63% of the time it hits 50 pips. The average move is 70. So we hit right on the average. But something else I noticed, and I think this is really important to be aware of, this would have helped you actually yesterday, if you were trading on the FOMC and stuff, is really paying attention to that deviation line when it's right around the expected average range move. Okay? So let's look at this. If we go in and we're looking at this trade, the average move we expect is 70 pips, right? But pretty much 60 pips lower is a one deviation, which we expect to be, a pretty strong resistance point. We don't expect it just one deviation. That's, among all the deviations, that's the strongest point that we usually hit. And so it comes down. We actually hit this level earlier. Okay? We hit it at 3 a.m. and it bounced all the way back up. Okay? After all the news and everything. So the market literally just trended on, pretty perfect little trend. Trended on down to one deviation. And then when all the news came in, it ran all the way back up to where it was at settlement. And then came back down. And so to hit that 70 pips, we really were expecting a new low and a break below the one deviation. So even though it did hit it, okay, the safer trade, and I guess if we probably get right down to the tick, it probably was right at 70. But the safer, the wiser trade would have been to really be looking to take your profit right before this deviation. Because this is where we expect it to bounce. And you can notice it hits right there, it pauses, hits, to the tick. Pauses. This took a while. We got, 5, 10, 15, 20, 25, 30, 35, 40 minutes before it actually finally broke down through that deviation level. So really, even though, you could have held on and it would have worked out great, there was a 5140 binary that you could have focused on, and that probably would have been the binary to go for. And this also comes into my 4357 rule. So say if I sell for 20, I'd like to buy back at, say 57 or whatever. The reason is because what if it comes within a tick or two of where you're targeting, your strike, but it doesn't quite hit it? Well, by using that 57, it takes care of bid-ask spread, and it takes care of it maybe not hitting it by a couple ticks. If I buy, I like to get out at 43 when I'm targeting a strike for the exact same reason. Bid-ask spread maybe puts me at 47, and then I give myself a few extra ticks just in case it doesn't quite hit the strike. And that simple rule has served me very well when doing these trades. So also, you easily had some short setups to go short. Bounce off settlement, coming down, trending down, lower lows, higher, lower lows, lower highs, over and over. So you also even have a short to go into it. And normally you would not try to short into this announcement, but if you're trading something like a Nadex spread or a Nadex binary, you could go directionally with that. Okay? Anyways, but that would be looking at the pound dollar on the ISM report. And let's see here. Let's pull up a few of the other pairs. We'll just check them on out and see how they move for us. We got the USD CAD. See the USD CAD right now went up. You saw it hit one deviation, moved on up to 1.5 after bouncing off that for a while. And I mean, it stopped right there at one deviation, bounced off on up to 1.5. So whether you're a Nadex trader or not, these deviation levels can really be useful for you. We also have them on the Forex futures available. So you can put in like 6C and it'll come up as well. Just to show you an example, I think this is it. Yeah, so we have the exact same level, so it's inverted. But it actually had 2 deviations on the futures. So look at that right there. But anyway, so you can go in, you can pull them up in the futures, on the Forex, and you got the 1 deviation, 1.5 deviation, 2 deviation level. And let's check out the dollar franc. So dollar franc right here, we're up to 1.5 deviations. And dollar yen. So on the dollar yen, we're up to 2 deviations now. So pretty massive move. That's a 96% of expected movement. The yen is getting slammed. Okay? So super weak yen, king dollar coming back into play. And I believe Tommy talked about that last week. It's like, get ready. And wow, that's an example right there. And like right up to 2 deviations. So I'd be really hesitant about adding into my longs. I'd keep trailing my stops all day long, okay? I'll trail them, to infinity and beyond, whatever. But be very careful about continuing to add in because you're going to be at like 99 points. You're at like 93%. You'll be like 99.7% once you hit 3 deviations. And we could hit it. I mean, the yen is still extremely weak. The euro yen's heading up. The U.S. yen still has a lot of market noise pushing it higher. So the trade's still there. I'm just saying you're getting it to a exhaustion point, and this is a point where I'm more in the mode of stop trailing than I am in continuing to buy. So let's see here. Let's go on in. We'll check out a couple of the other markets. We'll go in. We'll look over at the indices. And got the S&P. Decided to actually move today. It took FOMC, ADP, NFP, GDP, US ISM, and pound and euro interest rates to finally make it break the 1700. That's all. But it finally did break it, and it's just sitting at it right now. And there's a lot. Think about it. There's a lot of orders right here. There's buy orders up here for breakout traders, and there's sell orders here on contrarian traders. And so the market is just gonna eat this and gobble this up all day long. I mean, this is prime scalper territory, okay? And so it's gonna just have a little bonanza. This is sort of a binary butterfly zone that you could be looking at as well. And I mean, you could literally even pull up the Nadex scanner, and look at doing binary butterflies on it right now, just on this market, because it just it's at the end of the day I'd be a little more cautious, but like right now. I mean, it's loving this area. You can tell it's just sort of sitting right there. And it's like if I go over here and pull this up, we'll say the S&P, and see if we got anything coming up. Nothing on the 2 o'clock. So we'll reset it just to make sure. But it looks like nothing going on right now. It's just sitting right there. You can see there's nothing. There's no volatility expected at all. I guess you could try to go for $5 and $7 if you wanted to, but that'd be a pretty high risk. Maybe a good probability, but a pretty high risk for only like $10 or $15 total on a trade. Let's see, go down a little bit lower. We actually could have some choices, so we'll look at that. Look at end of day. Give us a little bit more time there. Here we go. Okay. And so you could do like 1701 and 1697 as a range if you wanted to for like the 3 o'clock. You can even you can't really get too much wider on the 415s yet. So, but right now, I mean, they're just going in, they're scalping like crazy. So you can go in, you can scalp too. You can go in, you can let it move up a few points, get out. Let it move down a few points, get out. You don't have to throw the whole butterfly on at once. Okay? You can do piece by piece. And so like right here, you can go in and, let's say it gets up here to like say 1700 or whatever. You could look at selling, say the 1704, because it'll go like worth 15 or 20 bucks, and then you can buy it back. And like I say at 5 as it falls back down, and then that's the way you would scalp it. Sort of basically it's swing trading the binary butterfly. So that's one of the many ways that you can combine this. So they don't call them options for nothing, right? And you got a lot of choices, a lot of ways that you can take advantage of the market here. And 1701 would actually be a new high. So if the market were to break that, like there's a strike right here at 1701 for $19, and if I get rid of my risk requirement there, might even still have that one for, see, like now it's $3. Before it was like $5, $9. I mean, the market would have to break a new high. So for that trade to be a losing trade. This one, the 1704, it'd have to break it by a few points. Well, it broke a new high today, so it's not like it's out of the question. But, at least would have to break a new high for you to lose on the trade. This one, the 415, is not a horrible trade. That's $31. It requires breaking of a new high. You do have some time. You have like 2.5 hours, so you're going to sit there and watch it and babysit it a little bit. But the advantage is, $31 means if I get out at 50, I'm actually a potential to make 30 and, only lose 20. So it's a good risk-reward trade if you're wanting to fade the S&P 500 right now. So, and the cool thing is you're not just fading it to go short. You're fading it to say either it'll go short or it'll stay flat or it'll go up some. But as long as it doesn't go really up to 1701, then I'm going to make $31 no matter what happens. So now if you want to short on this, we can see if there's anything available. We'll go over here. We'll go to our spreads, the spread scanner. And let's see, let's get rid of gold. Let's pull up. S&P over here. And we'll look at, say, selling them. And then we'll just see what's available. There's quite a few choices. I don't want to do all the math. So I'm going to say, give me at least, some 1-to-1s over here if I'm going to fade this thing. And I really don't want things that have, like, forever to break even. So I'm going to cap out my downward break even to, we'll just say 15 ticks. So I'll just put that at 15. Okay, now 15 ticks is like a 1.5 on the S&P because Nadex ticks in 0.1. And anyway, so right here we got all these numbers. We can figure out which one we want to do. I'm obviously probably not going to do a $300 trade or 111. I made it 111, but so we'll cap this at 150. These are just ways to get rid of spreads that you don't like. So if it doesn't add up, then I can get rid of that spread and narrow down further and further and further. So we'll pick this up when we get back right after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. And we're doing a wrap-up here on the deviations. We're also seeing if there's any potential trades. Like, let's just say you wanted to short on the S&P, and you want to use a spread for more profit potential. What trades would you have the possibility of doing? Because on Nadex, your trade can be your stop in and of itself. And so you could look at a couple of these different trades. We've got a 3 o'clock expiration here with us showing a $1,700 at a $22 risk. So it's a 2-point risk. Gives you an hour to put the trade on. About half of that is premium. So you're putting up about $50 risk if you did 5 contracts, like to make it equal $50 a point, like on an S&P future. About $50 is, so 1 point is premium, 1 point is intrinsic value there. And so you can sell that one. That's one choice. Gives you the lowest risk. You could go up here if you want to use a stop loss. You got 1705 and a 1710. And as a way, just in case, like let's say this flies, you're covered, okay? Because you're going to put up $500 margin, $400 margin if you're trading the S&P anyway. So say if you trade 5 of these, think of max risk as margin, not as necessarily the risk you're taking, okay? So again, as margin, not simply the risk you're taking. And that should help you out quite a bit because I trail my stops when I trade the spreads if I need to, meaning like I'm not taking $500 risk on the trade. I'll take $100 risk without using a stop. I'm not taking $500 risk, but I would rather trade this. It only has 3 ticks to break even, which is basically one tick on the S&P, right? Because it ticks in quarters. Nadex ticks in 0.1. So, I mean, that's basically like trading an S&P contract. It's right there at par. And so I'll sell that one and be pretty much equalized on my margin, but capped on my risk. And then I just trail my stop down, just like I would any other future contract. But the cool thing is I can scale out. You can't really get smaller than an S&P E-mini. It's already an E-mini. This, you could actually get 1/5 of that. So I could get out a half of them. You know, you can't, on the S&P, if you're thinking, I think it's going to pull back or do this or whatever, I mean, either you got to get out or stay in if you only got one contract. That's it. This allows you to scale out of the contract. So that's another huge advantage. And it has plenty of prop potential. It can make money all the way down to 1670. So there's plenty of prop potential to go down there. And $300 on what? That's a $1,500 prop potential on 5 contracts right there. All right. Well, so that's looking at just a couple of potential trade setups if you're wanting to fade that at all. And then, if you want to go long, you could, of course, do the inverse. If you want to straddle it, you could as well. So there's a lot of ways to take advantage of it. Let's check out real quick before the hour wraps up. And we'll see, we got 30, 111. We're right there at 1 deviation also on NASDAQ. It is, look at that. It is just right there, just bouncing up and down on that 1 deviation level. Let's look on over at Russell. So everything, like there's a lot of orders here. The market's just hanging out. Same thing, sitting right at a deviation. And that made a statistic from last night saying here's where it's going to chill out. That's what it's doing. Right over here, go over and look at the Dow. So on the Dow, we're basically a little above 1 deviation, but we're right there. And we didn't break 1.5, came right back down to the 1 deviation. We're just oscillating within a few points of it at the moment. And we'll check out a few of our metals real quick. So we got gold, and gold right there moved on up to 1 deviation, back down to settlement, and just chilling out. So perfect deviation move on gold. We got silver. We'll pull that one up. We'll look at it. And on silver, didn't quite, I guess we got a deviation, you could say, after settlement, technically. It moved up, but it did this like last minute spike at the end of the day. But then as far as today, calendar day, we hit 0.7, and then back on down, and now it's just flat at settlement now that the silver market is closed. All right, we all have a great day, safe day, and I will catch up with you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.